one of the biggest global energy utilities. We're developing a project with them in Europe, in particular in France. Chubu Electric and Chiyoda Corp in Japan. Chubu Electric is the world's largest LNG importer. They import a lot of Australian LNG and global LNG.
Hello, and welcome to TSN's ASX Investor Podcast, Stock Tales. I'm your host, Russell Katz. All thoughts, opinions, and analysis expressed on this show should not be used as an excuse to avoid doing your own research. Because remember, nobody ever made any money being lazy. More detailed disclaimers available at the end of the show. But for now, let's dive into today's episode featuring the Hazer Group. Joining us is Glenn, CEO of the Hazer Group, and he's here to tell us all about how we can have hydrogen today. That's right, hydrogen, especially clean hydrogen, is already seeing significant demand. And here to tell us all about it is Glenn. Glenn, welcome to Stock Tales.
Thanks, Russell. Great to be here.
You know, Hazer is a company that I've been following for quite a while, and this isn't the first time we've actually talked. Hydrogen really is been on a bit of a roller coaster ride, and yet the technology continues to progress and continues to remain at the forefront of a lot of the world's energy solutions. But Hazer is in a unique situation where you guys are actually have a solution that's commercially viable today. Can you talk a little bit about the Hazer process and how it fits into Hazer Group?
Absolutely. So Hazer actually stands for Hydrogen and Zero Emissions Research. So there was a vision over 15 years ago of effectively converting a methane-rich gas into a clean hydrogen product. So a really, a really unique vision, 15 odd years ago. The logo that we have, it's a triangle. You'll see it behind the Hazer brand. It has three effectively corner points to it: hydrogen, graphite, and decarbonization. So a really strong vision for a technology that was developed a long time ago to really effectively convert natural gas and split methane-rich gas into a clean hydrogen product, carbon in the form of graphite and high-purity graphite, offering a technology that effectively is one tech that serves three markets: the hydrogen market, the graphite market, and the overall industry decarbonization market.
When you say high quality graphite, you're talking battery anodes there. That's why it's so important that you're producing high quality and not low grade graphite.
Yeah, close to. I mean, we get graphite purities of up to 95%, so it's very close, and we've got actually a method and a process to get us to battery grade quality. But I'll talk about the graphite market a little bit more shortly, Russell, because it is a big market. And there is other potential applications for Hazer graphite that don't require post-processing, which is, again, another unique feature of what our technology can do. And that is we can actually fine-tune and adapt the overall graphite product stream into the application and the user base. So if someone says we want higher purity, we can provide that. If someone wants lower purity, which I know that sounds unusual, but it has actually been the case, a lower purity graphite, we can also provide that. But the uniqueness of, back to the technology, the uniqueness of our technology is that we use iron ore as a catalyst. Okay, so methane pyrolysis has actually been around for over 50 years as an actual process to produce hydrogen. What Hazer has done is effectively taken the process, the same process, we've added to that a catalyst into our reactor. And it does, I guess, two really important things for us. It substantially reduces the overall process reaction temperature for pyrolysis, and we can do it in the range of 800 to 900 degrees Celsius. Generally speaking, pyrolysis occurs at north of 1500 to 2000 degrees, sometimes even higher. So you can immediately see the competitive advantage that Hazer has under its intellectual property rights by using that iron ore catalyst to significantly reduce the process temperature, which in turn will reduce the cost of production. And that's the real advantage of Hazer. One technology, three markets that are growing at rapid pace: the hydrogen market, the graphite market, and of course, overall global decarbonization.
Yeah, and let's talk about the other aspect of iron ore is that, as a catalyst, it's a lot cheaper than a number of your competitor catalysts, which occasionally will even use such things as precious metals. So that really is a massive competitive advantage. But I want to switch a little bit to methane rich gas that you were talking about. What can you give us a little bit of more information on specifically what type of gas you're talking about there? Like, where does it come from?
Yeah, pretty much any gas. I mean, I call it methane-rich gas, but most LNGs, liquefied natural gases, most pipeline natural gases, biogas, wastewater treatment gases are predominantly methane-rich. Okay, so we can use, pretty much any major source of natural gas or LNG. And if you think about the global gas markets, I mean, most developed nations in particular, most developed nations as well as developing nations have got a pretty serious gas network. So our ability to plug in our technology into any industrial equipment or process or plant and provide a hydrogen where today's feedstock is already available is a unique advantage for us. And it again reiterates the low cost nature of what we do. We don't transport hydrogen. We effectively use an existing feedstock, which is gas or LNG. We effectively convert it into clean hydrogen and produce hydrogen where it's demanded by the customer, plugged in and co-located with existing industrial processes.
Yeah, and I think it's worthwhile mentioning that because while you can work with LNG that's derived from natural gas that is produced from the ground, like fracking and other methods, you also very uniquely can do it with, as you said, wastewater gas or biogas, which just to underline that for our listeners that aren't aware of exactly what that means, you're talking waste food. So, recycling centers and things of that nature, or even landfills. I know that Waste Management, one of the largest waste companies in the world, and they're listed in the US, their fleet has been running on CNG from their own landfills for quite a while now. So this is definitely something that waste companies are very keen on adapting into their both cost network, but also into their facilities.
Indeed. Look, it's another prong to our strategy, Russell. I mean, we talk about big industrial applications, and I'll talk about our customer base shortly. But there's also another pillar to the strategy, which is, well, all of those global, I think it's 3,000 or 4,000 wastewater treatment plants worldwide that have a significant amount of methane emissions. For the listeners that are out there that are not familiar with Hazer, our commercial demonstration plant, which is in Western Australia, it's the fifth successful scale up of the technology. We actually use wastewater treatment gas and biogas as our feedstock. So we're solving a massive problem for the local government in Western Australia. We're converting, in some respects, some of the dirtiest of gases, and biogas and wastewater treatment gas has got a few nasties in it. So we clean all that up to produce a methane-rich substance that goes into our reactor and our process, and we effectively, out the other end, produce the cleanest form of hydrogen through fuel cell grade hydrogen. So a really unique opportunity to demonstrate our technology that takes dirty gas into clean hydrogen at zero emissions, in fact, carbon negative, which is one of the reasons why the Australian Renewable Energy Agency, the federal government, provided quite a substantial grant to us a couple of years ago to develop that program.
So to kind of summarize, companies want this because not only does it help them reduce their emissions, but it also makes sense for their bottom line because it's providing a safe way to get rid of what can often be a rather dangerous byproduct. So it increases their bottom line and it increases their environmental credentials. That's why these companies are so excited about different processes like that, and Hazer definitely seems to fit exactly where they're looking.
Indeed. Carbon costs are only going up, Russell. I think you hear the term a lot, polluter pays. I think you're going to see that more and more where the end user of natural gas or any high emitting carbon feedstock or process, effectively at some point they're going to be fairly substantial costs to do that. What Hazer does is provides a technology that will not only provide clean hydrogen for industry, but also a graphite, which we think has got a pretty serious market to it, but also lower the cost of carbon emissions for the users of our technology. It's already been picked up 3 times already. We call them foundation projects. We're kind of walking and chewing gum at the same time, as I like to say, because we're developing the technology, but we've already got growing demand. So we're walking down 2 pathways at the same time, which I like to think is strong validation for the technology. On G, one of the biggest global energy utilities, we're developing a project with them in Europe, in particular in France. Chubu Electric and Chiyoda Corp in Japan. Chubu Electric is the world's largest LNG importer. They import a lot of Australian LNG and global LNG. Again, sees the value in what Hazer technology can bring to their portfolio. And more recently, we've just signed the next wave of commercial contracts with our partner in North America, FortisBC. So already 3 foundation customers, but behind this is a lot of conversations we've got going with, again, another group of potential customers for our technology.
Yeah, and I think that you really kind of touched on an issue that I think we really need to discuss, which is everybody's heard of hydrogen at this point. You really have to be kind of living under a rock not to have at least read about it at some point. But most of the time when you hear about it, you're talking about projects that really we're talking 5 to 10 years in terms of production, and those focus around what's called quote unquote green hydrogen. It sounds like your projects are ready to go at this point, and that you're not talking about a 5 to 10 year lead up. Can you talk a little bit about the hydrogen market? If you're already getting these commercial contracts, there must be a rather large market. Can you tell us a little bit about what the current demand structure is?
Yes, I can. So the demand, again, a lot of listeners won't appreciate the size of the market. The market today is just shy of 100 million tons per annum. Now, to put that in context for you, I like to explain that in terms of the global LNG market. LNG today is about 350 going to 400 million tons per annum. So you can see already that the hydrogen market today is a quarter going to a third of the global LNG market. So it is a massive market already. So that's the size of the prize today. Mm-hmm. All of that hydrogen, almost all of it, is produced with a process called steam methane reforming. And long story short, you effectively mix gas, natural gas or methane-rich gas, with steam, and the 2 products you get is hydrogen, but a significant amount of CO2. Okay, so in fact, every ton of hydrogen produced today with steam methane reforming has a byproduct of 10 times or 10 tons CO2. Wow. So it's more of a CO2 production method than it is a hydrogen production method, to put it frankly. But that's the solution that we're providing. We use the same feedstock as today's incumbent technology, so gas, and we produce clean hydrogen. But instead of the CO2, we have 0 emissions, and we have a graphite co-product. Okay, so we will immediately provide a 0 emissions clean hydrogen graphite production system that can be plugged in immediately today. Now, green hydrogen, a lot of talk about green hydrogen, and just for your listeners to understand what that means, green hydrogen is the common term that's used for electrolysis, and electrolysis effectively splits a water molecule into hydrogen and oxygen. Now, the downside of that is it's effectively 7 times the energy to split a water molecule than it is to split a gas molecule. So you can immediately see that the energy requirement for effectively electrolyzers is significant. Mm-hmm. And it's about 50 to 55 kilowatt hours per kilogram of hydrogen, where Hazer can do it for significantly under 10. So immediately when you look at the cost picture, we can provide a low cost, immediately available production technology today that uses the incumbent technology's existing feedstock with 0 emissions.
And I think that everybody would agree at the end of the day that green hydrogen is only commercially viable with significant renewable energy production. In it can't be used off the grid or off anything else. You're looking at renewables or nuclear. And the truth of the matter is we just don't have the capacity at the moment. It's being built, but it's going to take quite a while. And as you said, there's a massive hydrogen market currently existing. And you have a method that can be used today with producing, I think you made a strong case earlier to say that it's even negative emissions, because you are taking a product that would likely either be burned off or disposed of as natural gas. And you're turning it into a clean energy product. So I think that, you really could argue negative emissions there.
Certainly. Look, you're spot on. Solving today's problem, which is the billion tons of CO2 that's produced with today's hydrogen industry. And that's what Hazer does. And that's why we call it a disruptive technology, because we can replace steam methane reforming with limited cost, and effectively the willingness for our customers to pay is going to be significantly higher than the willingness to pay for green hydrogen molecules, because of effectively the energy that is required to produce hydrogen. As you say, you need a renewable power grid to power a green hydrogen plant, just purely because of the emissions that would be required if it was plugged into the grid today.
Yeah, absolutely. Well, I think that really is quite exciting. I also want to touch base on, I think you kind of touched on this a little bit, but I think one of the questions that's always on investors' mind, but we don't always have the opportunity to ask the CEO directly this is, why should I invest in you now and not 12 months from now? What's kind of so exciting about what's going on? I know you guys have had a number of announcements, and I know you obviously can't tell us what's behind the wall, but can you give us a little idea as to what's going on right now and why it's such an exciting time for Hazer?
Yeah, your listeners won't need to go back far to see how we are de-risking the technology. Why now? A stock like this could re-rate at any time. We continuously de-risking our technology. In fact, this week we had a further announcement of 100 hours of operation from our CDP. That's a major proof point for our technology as we go into the next phase of testing and also commercialization. So that again just de-risks and validates that the technology that we've got is working, and it's ready to be deployed commercially. Secondly, we are in commercial conversations, not just with Fortis and Chubu and ONG, but we've got a raft of new interest in the technology, and we've seen a multiplication of interest since our CDP has come online in January this year. So de-risking the tech, lots of commercial conversations going on at the same time. I think a stock like this could re-rate at any time, and so I think now's a really good opportunity to get involved. We are at a pretty attractive valuation for those that have been watching the stock. So, a good entry point now. You've seen our stock go up as high as $1.80 thereabouts. We trade today anywhere between 45 and 50 cents. So the analysts that are out there that cover us today have got effectively a target price north of $1.50 on average. So you can see that we are potentially 3-4 times money from where we are today. We think it's a great opportunity to invest in Hazer. The tech's de-risking, and we've got a lot of commercial conversations, and we're starting to get visibility on what commercialization looks like. We've just struck a really exciting deal with our partner in North America, Fortis BC. And I think if your listeners go and have a look at that announcement, you can start to see the framework for what commercialization looks like for Hazer Tech. Watch this space.
Fantastic. I really appreciate you coming on, Glenn. It's been great having you, and I look forward to continuing our conversations. Thanks for coming on Stock Tales.
Thanks, Russell.
Thank you for tuning into the disclaimer. Investing money into capital markets involves risk and could result in losing money. The people on this podcast express their own views and may or may not have been paid to appear. Only you can determine if a particular investment is right for your portfolio. Always do your own research before buying or selling any security or investment. Remember, past performance is no guarantee of future results. One should always view any investment with their own personal risk tolerance, liquidity, tax situation, or anything else pertinent in mind. No person on or related to this podcast was making any offer or solicitation.